This is Paul Singh, the market speculator, with the intraday report for February 18th. Let's quickly go over current positions here. And I've got a lot of questions today about JNUG and holding on to SPXL. So let's get into that really quick. Now, we got into JNUG short when it looked like it was ready to pull back here. We'd been waiting for a signal, gone parabolic here. We talked about taking a small position here because of the volatility here. There could be a lot of back and forth. So on this down day, which was basically our confirmation and test of this high here, we got in around 43. Sorry, it's actually Nugget, not JNUG. There we go. Same exact pattern here. We got in at 40, in the 43s. Now, I talked about taking a small position so you could use about a 10-point stop, and we're still good with that 10-point stop here. So around 43, 10-point stop would be 53. Now, we're very close here. I might give it a little more room, but you should be at a point here where you position sized that this would not cause too much discomfort. It would be just a normal size loss. I know 10 points seems like a lot, but this thing is so volatile here. We could very well close here still negative. So we'll see how it goes. It does look good here. Maybe this is the continuation. We got stopped out, get stopped out. That's fine. We gave it a shot. Didn't work out. But the point here is you have to position this sizes. So it still is a small loss. So I am still in Nugget here and will continue to do so and reassess if it gets in the 53, 54 range, which we're about a 1.5 away. Now, SPXL, I talked about this morning, that the W pattern is right at that breakout level, and you can get some consolidation here. We've had this 4-day bounce here, if we count this day right here, the 4th day of this bounce, and usually at that point we start to rest or even pull back here. So that's fine. Again, entry 62. We've taken a profit at 66, so we're still in above our initial profit range. And I actually would even like a little consolidation here before another break and maybe a break of this W pattern. So this is fine here. I'm not going to rush here and now take that full profit. So SPXL is good. CMG, again, we needed to, again, we've had 4 days of bounce here, and I would expect some consolidation or even some pullback here before the run up. And when you're swing trading, and not doing a quick, 1 or 2 day swing, you've got to be able to hold through this kind of through consolidations or even pullbacks in trends. You're very rarely just going to run straight to your target. CMG still looking good. Now, stopped out of course today. This one, for me, was a little frustrating because I called it correctly. I got the pullback I wanted. I set a target at 48, and wouldn't you know, it goes down to about what was it, 48.15, 48.13. So I missed my target by 13 cents here. And then it ran up and I got stopped out. Small loss, but the loss doesn't bother me at all. You guys know small losses don't bother me. A little frustrating was the fact that I was so close to my target, and maybe I should have, once it got 10 cents away. And you've heard me say, 10 or 20 cents is not significant when it comes to a swing trade where you're looking at $3, $4, or $5. That same thing goes for my entries, where I'll enter a stock, I send an alert out, and maybe you don't see it for 5-10 minutes or even longer, and the stock might be 20 cents away from where I entered, or depending, if it's a $500 stock, it might be $1 away, and that's really not significant. If we're looking at a $500 stock and we're looking at a $50 move, $1 doesn't mean much, and if you're looking at a $30 stock, a 20-cent move doesn't mean much. So I probably should have taken a profit here. Kicking myself a little for that one. UWTI, and we talked about this again in the morning, oil inventories could wreak havoc on the day, and it's still break even. We're still in this W pattern, so that's fine, but didn't quite run up to 2 like it was starting to look like we could in the morning. But now oil inventories are out of the way, and we'll see how it responds the next few days. And I think that is it for current positions. Let's quickly look at biotech. We haven't looked at that for a while. Has bounced here, but hasn't really given us a strong bottoming formation. Looks like, there's different kind of pullbacks right now. There's the commodities, or sorry, bounces. There's the commodities bounces, which actually look like bottoming formations. So we've talked about these to death: oil, energy, copper, steel, ag. All these things are bouncing off bottoms that look really strong, whereas biotech looks more like one of these dead cat type bounces. And the same goes for the FANG stocks. That's why we talked about this morning. We want to see them cross these levels and hold. You can see here, Amazon has bounced right to the 200-day, and this actually might be a decent short setup. We'll look for a signal. Maybe it stalls here, then tomorrow continues, and then we could get short for a trend. Same goes for Netflix here, very similar pattern. Google looks a little bit stronger here, but the pattern is same. It's just relative strength-wise hasn't come down quite as much as it's still above the 200-day, and Facebook is a little stronger also, but overall kind of that same pattern. We could pull up a bunch of the strong stocks we were watching before: Baidu, LinkedIn, a little different pattern here, but pretty negative. I haven't looked at Tesla today. Tesla, very, very similar here. So maybe I'll take a stab at the close. And remember, when I say take a stab, it's really a feeler position. I'm just testing things out. It doesn't matter if you take a small loss on this. So I may try something like this at the close. We'll see how the market is. That's it for the intraday report. So that's kind of what I'm watching here. And I'll see you tomorrow morning, or with a trade alert later today.